What's going on, my guys? I hope everything is going well for you today. Gonna be going over Bitcoin with y'all. Man, I feel pretty good, not gonna lie. I called this bear flag, I want to say 2 days ago, and it's just been nothing but net for me, not gonna lie. I initiated another short position. Roughly around at this yellow candle here is when I initiated it. It was roughly around here. I'm currently up 3.4% at this time. Now, the cool thing about these bear flags is they're rather consistent in regards to measurement. Now, there's overperformance, there's underperformance, so you can't necessarily expect it to go to the dollar, but for the most part, I truly feel that this move to the downside is not over. So the way that you measure these things is you get to the tip of the previous local high and you go all the way down to the candle close of the tip of the inverted flag, essentially. Then you get this bar here and you get to where the point of breakout is, and there you go. That's the projected zone here, and it's crazy. And I told you, I believe, last video and the video before, this is just such a perfect confluence zone. There are just so many indications saying price wants to lead here. It's like a magnet. Okay, so we have a supply line coming back from like the past 2 months, almost 3 months, I think. I'm losing track of time. But and then also we have this like key level where it was previous resistance. We broke through it, kind of like, making it somewhat of a weakness, but as you can see, there was some fuckery afoot due to the yellow X, which is a market cipher indicator of whale manipulation, hence why it kind of did overperform to the downside. So we have, I mean, it's just, this is like a magnet, whether if it's a resistance or support zone. There is this kind of like choppy zone right here. I mean, this is pretty fluid. This particular box, I've changed it so many different colors. Yeah, red, teal, teal for me is, you know, bullish and stuff like that. But anyway, as it stands, yeah, this is going to be a super choppy zone. Volatility is on the verge of kind of expanding. Um, we can get into that a little bit later. But yeah, so going back to it all, um, I do see 21.6, 21.5 being like that key zone where I'd really expect a reversal. Now, it's not guaranteed for it to happen, but there's just a lot of signs pointing that direction, frankly. Okay, anyway, I'm gonna go to the daily just so I can give you a macro perspective and kind of just really zone in micro. So, yeah, I'm gonna get started on that. So we had this confirmed bearish divergence 4 days ago, essentially. And yeah, that which is a huge reason as to why I was pretty bearish. Money flow is expanding to the downside still. No current indications from a daily perspective that there's going to be any reversal anytime soon. Also, as you can see, I have this tool called BJ Superscript. That's what really makes my candles here color coded. And as you can see, we went from green, to somewhat, uh, bullish to yellow, and now it's just a nice little flow. We're going into the red zone here. So that's not pretty good. What's kind of interesting is on the market cipher A, exponential moving averages here, um, there is signs that the EMAs are trying to flip into support, so that I have to take in consideration. So as long as we see daily candle closes above um, this here, let me give it a green and let me just make it thick. All right, yeah. So as long as we see daily candle closes above $21,235, we're still good. We're still a go. And it's crazy because yes, this is a bear flag. It is a bearish move. But as you can see, the extension is literally above that. Okay, so even I don't mean to sound like a freaking like Nostradamus guy right now, but I feel like if for the next maybe like 1, 2, 3, 4 days, we're getting downside and choppiness. As long as we're able to maintain this level of support, we are still technically bullish, because it's only when we see a lower low printed, that is when, shit will eventually hit the fan, and then we'll see prices, all the way down to potentially, 16.3 to 15.6. Yeah, whoops. So that is ultimately what I'm looking at. But as it stands here, this supply line down here has been historically support. So you have to assume that there will be big whales opening up lungs near this particular green line here. Okay. Now, it's a little wonky on the daily, but I initially did this on the 4 hour. 4 hours are pretty notorious of holding consistency, which is why I kind of did it this way. Actually, wait, no, I think I actually did on the 1 hour, because I usually do candle closes here. Yeah, I actually did it from a 1 hour perspective. So I did it from the 1 hour, and then I just kind of found the first high or low, and then I just printed it all the way through. And so far, it's been holding strong, and it's been a pretty nice indication of overall, just it's really caught it a few times. I mean, like twice, really. I opened up spot longs, and I mean, oh God, this was fun. Okay, so just to recap here, I opened up spot longs around here, kind of closed it around here, so that was an 18% move on my spot trade. You know, right here, I kind of did it. It was a little rough. Yeah, right here. And I kind of closed my long right around here at 14%, 13%. I think it was like 13%. So like how I trade is I have multiple positions at once. Okay, so I have multiple accounts. One is for spot, where I'll just like buy the dips, I'll sell the tops or at least close to them, right? And then, but I also have uh, like a scalp trading account where like I'm on the 12 minute, I'm zoomed in. This is like when I have free time. I am a developer. I do, build stuff like software and websites and stuff like that. So I do have my occasional clients come through and they ask me for edits and all that kind of stuff. But like for the most part, like if I have free time, I'll, just scalp the crap out of this, particularly Bitcoin. Bitcoin's really easy. Um, as opposed to like all the other altcoins, because the altcoins, they can have particular shapes and patterns that are independent from Bitcoin. But if Bitcoin breaks, let's say for example Tezos, right? So if Tezos has like an ascending triangle, okay, and Bitcoin is breaking out of a bear flag. So ascending triangles, just for perspective, is a bullish pattern, you know. But if Bitcoin fulfills a bearish pattern, then that completely nullifies Tezos's ascending triangle. You see what I mean? So essentially, like whatever Bitcoin and Ethereum do, all the other altcoins are pretty much going to copy. So that's why I'm a big fan of just trading Bitcoin, or at least using it as like my indicator while I'm trading other things. But anywho, going back to just the overall macro of what Bitcoin is here. Um, yeah, or well, let me just finish up. I'm sorry, like how I trade. So I have my scalp position where I'll use the 12 minute, I'll use the 24 minute. Those are like really trusty time frames. The 37 I like to use for swing trades. Now swing trades are a little bit different. So I have, going back to it, I have my spot trading account, I have my scalping account, and then I have my swing account. Now a swing account is basically 3 days to a week, maybe even 2 weeks maximum, and I'll have that going on. So the scalp I use like very like short-term time frames, like the 5 minute, the 12 minute, the 24 minute. Now my swing trade I'll use, like the 37 minute, the hourly, the 2 hour, the 4 hour, and then the spot I'll use like the daily to the 8 hour to the 4 hour, all that kind of stuff. So yeah, so like on the swing trading and on the scalp trading, I do use leverage. So It's not substantial. We are in a crazy market. You don't really need to be using leverage due to like the level of volatility. Frankly, this is not financial advice, by the way. This is just like the strategy that I've incorporated that I've seen success with. But at the end of the day, I like to divide things up because you don't want your you don't want your mindsets to get shifted. Okay, I even have my accounts named differently, so I have like because it puts me in a particular mindset. Because if I opened up, my scalp 2022 account or whatever, um, I'm in the mindset, okay, only stay in the 15-minute time frame or whatever, and then look and then read and analyze my indicators, okay, and then I'll kind of go off as such, so I don't get mixed up. And same thing with the swing trade. Like if I'm on a if I'm on my swing trade account, I'm like, okay, only stick to the 4 hour today, or only stick to the 2 hour if you want to get like more precise entries and stuff like that. Same thing with spot. I'll be like on the daily, like okay, bull crap aside, like despite what your heart wants you to think, like what is your mind telling you? What are your eyes are telling you? Like is it a time to sell? Is it a time to buy? And so that helps out a lot in regards to just like keeping organized with how you're structuring your accounts, uh, how you deviate your mindsets and stuff like that, because that's big. So because it can get really confusing because you can be looking at the chart one day and you're like, oh man, I kind of feel like I want to have some scalp fun, and you're on the 15-minute time frame. But then you're like, wait a minute, but like, what if like actually I want to move my spot to like, coin X to coin Y or whatever the hell. So it gets really confusing. So it's just better to just like have your accounts separate. I have three, but I mean like just for some people, like if you're only doing like scalping or you're only doing swings, you have your spot account, don't touch that, just buy and sell between it, and you'll have your actual hardcore trading account where you're zoned in and you're looking for those precise pivot points, all that kind of stuff. But anyway, all right, hope that was good info for you. All right, so let me go to the daily chart. I already did the MACD. I already did the market cipher B um, indicator here. So on the daily, this is really bad, honestly. Oh my God. We are flipping from bullish to bearish. Like this could potentially be the beginning of a huge, huge move. I do not like to see this at all. Now, what could happen here, it's not a definitive like, oh, it's forever going down. What I could potentially see is okay, we had this, move to the downside, then can we make a higher low situation? Because we really haven't done much of that here on the daily perspective here. Because as you can see, we have a low, we have a higher low. You could kind of constitute that as a higher low, but we never really had a legit like cross down, then cross up, and continuation. So that's something that I'm really keeping my eye on. I can't really say from what I'm looking at in regards to what the data is telling me is we are going full reversal. But as you can see, the bears are definitely in control. The bears are definitely in control. So it's something to keep in mind and really look for just positions to maybe like hold off, stay on the sidelines. There's no need to actually initiate a trade today or the next hour or whatever. It's just all about like figuring out what you're going to do and really setting yourself for a really good entry because you could, and that's the thing, like why rush into a position where you could ultimately compromise yourself and lose capital when you could have just waited a week, had the same amount of capital if you didn't trade that crappy trade, you know what I mean? And then you waited and now you're in a better position that could, net you 5, 10, 15% in profit. So there, it's just all about patience. And that's the thing about what I've seen a lot of different people. I am in different like trading groups, and I'm like I like to network with like-minded people and who also trade and stuff like that. And really, like the biggest issue with individuals in the trading world is patience. They do not um, they don't meditate, right? They don't take notes while they jot down what they're doing. Like, because when you break down exactly what you're doing, you're able to then reassess your logic it's called metacognition. Like you're thinking how you think in those moments in time. And what's great about note taking, and this is kind of like another reason why I started this channel, because like in a way this is me note taking in how I can review myself in getting becoming a better trader ultimately. But yeah, at the end of the day, a big key component as to why people lose trades is their lack of patience. But okay, um, now I'm going to move to the hardcore indicators here. I'm going to go to the MACD. So the MACD finally printed. It's not confirmed, but a sell signal. We have 3 hours and 47 minutes left to confirm this sell signal. But as you can see, the histogram has officially crossed below the zero line. That's bearish. That just means that it's easier for the bears to move the price down. Okay, same thing with the MACD-X. The MACD-X, we had talked about this, days ago, that the um, MACD-X printed a bearish divergence, and we actually had a confirmation sell signal 3 days ago. Okay, and now, as you can see, we are seeing a bowling event here with the slow moving average on the MACD-X. So that is, if you're a bear right now, you should be happy. Also here on the RSI, we do have a cross below the slow moving average. I don't usually like these, frankly, if I'm a bull. Also, looking at this, as I can't be ultimately bearish until I see a lower low on this indicator right here. If the RSI prints a daily candle close below here, which is at 45.8, then I'm more like, okay, this bad boy is going all the way down to like 14K or something like that, or 15K. Uh, can't necessarily say that just yet, but as you can see, we do have a bearish divergence. So this is interesting. Uh, Same thing with like the TSI. Same thing with the oh excuse me the MACD and all these other indicators. We have not confirmed a lower low just yet, so it's not over for the bulls. But it's cutting it really close. So this is like a really pivotal moment in the market. This will determine if we are heading, if we're bouncing from here and eventually going up to like 26K, maybe even 27.6K, or we're breaking below and we're creating new lows at like 16K, 15K. So it's huge. The next couple of days are going to be huge to the trajectory of where this market's truly going. So there's a lot of indications that we could ultimately bounce here from 21.6, 21.5. But at the end of the day, it only takes one snippet of bad news to, print that extra 3% that's ultimately going to break the supply line here. So it's a wait and see. As long as we're above, 235, which was what my markets, I'm sorry, what the TSI indicator indicated the other day. We're still bullish, but yes, at this time, the ball is in the Bears' court. Okay, so yeah, let's go to the 4 hour. Okay, I'm gonna zoom in. As you can see, money flow is still thick in the red. We have yet to print any substantial moves here in regards to money flow, nor have we seen any type of divergence or buy signal, so you can assume that the price is going to continue to the downside. What's another concerning thing, if you're a bull, is the exponential moving averages are now red. And the Heikin-Ashi candles, which are essentially it's like built-in momentum indicator, the Heikin-Ashi candle, this is well, I want to say first, but this freshly printed candle does have a flat top, and when Heikin-Ashi candles have flat bottoms or tops, so if a bear candle has a flat top, that means momentum is strong to the downside, so you can assume continuation. Same thing with bullish candles. So if we have a flat bottom for bullish candles, you can assume momentum is continuing to that side. So that's a nice key indicator regarding Heikin-Ashi candles. Heikin-Ashi candles are freaking awesome. I love Heikin-Ashi candles. But anyway, um, All right, so I'm going to go with the TSI here. So we did officially print a lower low and a lower, well, it's kind of close, but we did print a lower high. So as you can see here, we have a higher high, we even have a little lower high right there, and another lower high. Let me move this thing out of the way. There you go. So, yeah, that's not good in regards to overall trend. But actually, to be honest though, this is a nice little reset. If the TSI can, print a low down here, that'd actually be a really nice buying opportunity um, from a macro swing perspective. Let me just like zoom out here and show you why I really like these. So obviously if the trend is completely down, um, there are some like caveats obviously to the TSI and just overall momentum. So like if the exponential moving averages are acting as resistance, in this case when they're red, the likelihood of these moves to the upside is significantly like invalidated, right? So when there's intense expansion meaning that the EMAs are like starting to gain distance from one another, that just means that volatility is in the hands of the bears in this particular case. So you're going to want to hope for and expect divergences. So in this particular case, we had a divergence right here, okay, where the the uh, the indicator created a higher low situation, but the price was creating lower lows. So that divergence was a nice little indicator in a reversal opportunity. So right here, if you bought right here when that divergence printed, and you just spot held and you just held it to the tip of the uh, well, it's really tough, obviously, but like the 50 EMA is like a key indication of resistance usually, uh, given in this environment. So if you were to sell near there, I mean that would have been an easy 16, 15%. So going back to it, so yeah, in regards to this particular move, same thing. EMAs are red. You have to wait for a divergence to really play out, and boom, there you go. We had some divergence here, ever so slightly. It was a Class B bearish divergence. Class B bearish divergence just means that like we had like a flattening instance, and we had a we had a low then a higher low. When you have a low and then a higher low on the indicator, and then you have like a double bottom, that's the Class B. I'm sorry, Class B bullish divergence. I said bearish divergence, but I meant bullish divergence. That's a Class B. So there's Class A, Class B, Class C. That's a whole nother um, talk. But anyway, so in this case, as you can see, the EMAs were starting to kind of flip. We had like a first instance of bullish indication, and we were kind of creating a little range for ourselves. So you didn't necessarily have to wait for that divergence at this time. So going back to it, is once this TSI indicator goes down here in this zone in the negative 40 to negative 50 region, and yeah, it's just a really nice spot buy opportunity. Not financial advice, but like it's a pretty decent opportunity to really kind of get like a swing position. So that's from my perspective. That's what I intend to do. I will definitely voice my opinion when that is near, but that's kind of like my next real big spot purchase in regards to Bitcoin. If that's a big if the supply line holds. Okay. Now, the supply line, I want to see a daily candle close. I want to see a lower high confirmation. Lower high confirmations could take 2 days, it could take 3 days to confirm that kind of stuff. So we are like a week away from that. All right. So you don't have to run to FTX and buy some spot Bitcoin or anything like that. All right. So Um, that was the 4-hour TSI. Let me go to the other indicators over here. So on the 4-hour MACD, we are having okay, we had a significant lower high instance right here. on the MACD, and we are playing it out as it stands. The slow MACD, the slow moving MACD, and the fast moving MACD were essentially rejected off the zero line. Now, what I'm kind of looking for is, will this actually print a high or low situation? That has yet to be determined. There's probably another day or two of that to really kind of get a better semblance of it. But if we actually see some divergence on the MACD, that would initiate my my trigger finger, if you will, in doing a spot long position, or maybe even a scalp long. But at this time, as long as price is below 22.805, I'm firmly on my short position at this time. All right, so yeah, RSI is officially back into the bearish control zone on a daily perspective. Now, there is a trend that's kind of formed here on the 4 hour. So what's great about the RSI is that you're able to actually do trend as well. So now I have a trend on the 4 hour. I can essentially just wait until I see essentially a breakout and then a back test. You never want to forget that back test, okay? It's really exciting when these things break out finally, but what could really hurt you is not waiting for that back test, because just because it broke out doesn't mean that the low is in. Essentially, when it reverts back down, that could be the low, and it could be a dramatic low, okay? Because volatility, when these trends are broken, volatility just spikes through the roof, and if you're on the wrong side of it, you could get really, just you can get the skin filleted off your back, so to speak. All right, but anywho, okay, going back to the TMA. All right, so I talked about this yesterday, and it did happen where there was a fake out that I was initiated. So once the TMA breaks below the slow moving average, it's like clockwork. Essentially, what happens, it eventually pumps to the upside, back tests this as resistance, and then initiates a lower low, which it's currently in that situation. Now, what I'm expecting is for the TMA to eventually play around this zone on the 4 hour. That is when I'm going to feel more comfortable initiating a long position. We are not in that. We're in the thick of a bear move, so it's not a good idea to think of swing longs. If anything, if you want to do long positions, I would refrain from it. I would actually do, even if I'm doing scalping at this time, I would do scalp shorts at this time. Just not financial advice, but that's just what my indicators are indicating. Okay, anyway. Alrighty. Let me go to this here. Oh my God, we got a huge, big ass blue wave. Okay, so we do have an interesting situation on our hands where we have waning sell momentum. All right, but we have a crazy bearish wave right here. Um, What I would like to see is a trigger wave on the 1 hour, or maybe even the 37 minute. The only way you can get custom, I'm not too sure if they changed it, but the only way you can get custom times for TradingView is if you actually have the Pro account. So if you do have the TradingView Pro account, you can add the 37 minute. I really like the 37 minute because it's like a Fibonacci sequence in regards to getting like an extra leverage, if you will, against the 1 hour traders. So a lot of institutional traders at the lowest, they'll trade the 4 hour. So why exactly is the 4 hour usually consistent? Is because a lot of institutions, that's the lowest time frame that they trade on. Now, the second most is actually the daily. Okay, so if you're more of a swing trader and a scalp trader, you're on the 15 minute, you're on the 30 minute, you're on the hourly, on the 4 hour. So you're kind of having to front run these institutional moves, which is completely fine. People can make a great living off of that, or they can get like nice arbitrage opportunities off of that. But it is riskier. The indicators aren't as consistent, or at least you can't just rely on like one or two indicators. So with like the 4 hour and daily, you can really just rely on maybe like one or two indicators. But if you're like zoning in on like the 15 minute, the 30 minute, even so, I don't trade the 5 minute, but like I'll go as low as the 12 minute, the 12, 15, 30, the 1 hour. You need multiple indicators to really like confirm things. But anyway, Yeah, going back to the hourly here, what's interesting here is we are definitely oversold, but it doesn't mean that this thing could just easily roll over again. So kind of like what happened over here, where it could just like do some nasty stuff until it ultimately just decides to cross the zero line. Now on the 1 hour, you can wait for the zero line cross, which is up here, or you can actually wait for a divergence or like a trigger wave. Now a trigger wave is, for in this instance, right here. So a trigger wave is when you have a wave, a bigger wave, you have a space, and then you have a smaller wave. That is a trigger wave. This is textbook trigger wave right here. You want to buy here, you want to swing here. And what's great about these moves is that it's applicable for the lower term time frames as well. Not as consistent, I'll tell you that right now. I don't go below the 24, the 12 for those trigger moves. But yeah, anyway, um, yeah, at the end of the day, it's just better to wait for divergences if you're more conservative. But anyway, so far, bear move confirmed. So we do have a dead cat bounce opportunity right here. So as you can see, the EMAs are expanding to the downside. There is a bounce here. So what I'm expecting from the 1 hour perspective, this isn't financial advice or anything like that, nor will it potentially not happen. But from my perspective is that we're going to see ultimately like a bounce here and then a rejection to then create another lower low. That's for what I'm expecting from the 1 hour. Also, as you can see, on the 1 hour, we're already close to the oversold zone, but given that it is the 1 hour, I like to see divergences or like a trigger wave. So yeah, we are in a decent position to enter maybe like a scalp long. It's really, really risky, frankly. I'd rather just wait for, the pump to the upside kind of commence and subside, and I want to see a confirmed lower high, and then in that lower high instance I would then just initiate a short. That's kind of like how I would play that move. um, eh, Let me see here. Okay, let me go to the 1 hour. So on the 1 hour time frame, we are still having expansion. um, Now, we could get that divergence sooner rather than later. Now, keep in mind, each histogram, each little bar here is 1 hour. So, I mean, frankly, if the next couple of bars I start seeing the yellow kind of print out, I would like to look at like other instances, like what's the RSI telling me? Like what's the TMA telling me? Stuff like that, and where can I see the divergence? But as it stands, on the 1 hour TSI, you can expect price to continue to the downside as long as price is below 22.59K. So yeah. Uh, Also, right here, we had a divergence, but it completely got nullified here. Um, yeah, and now we're kind of still exploring below, creating lower lows. I don't like seeing that. If I'm a bull or if I'm looking for like a short-term swing or scalp, when the lower lows are printed, that just indicates that volatility to the downside is kind of just getting more strength, and it's just harder to get a better long position. You're really trying to catch a knife at this point, and that's just not smart. Okay, so on the RSI, we are kind of like crossing the 34 up, but as you can see on the 1 hour, I don't like the so notoriously 34 cross ups lead to pretty good moves. But on the 1 hour, it's just not as consistent. As you can see, we had one, two, three, even four the last time. Now, I like to see that more so like on the 4 hour. The 4 hour is a little bit more consistent, as you can see. So we're not near the actual 34 on the 4 hour to actually say that, yeah, like this is a really good opportunity to buy. So going back to it, if you insist on scalp longing, it better be a scalp. It better be like a quick get out, hit it and quit it type of thing, okay? All right, so let me go to the 1 hour here again. Um, the TMA. Now the TMA is an interesting position because it is close to the overbought zone, but I want to see a divergence. I want to see a confirmed bullish divergence before I even consider longing at this time. So yeah, okay, well, I'm gonna leave it at that. Base case here, the reason I have this is, yeah, I don't know if you remember, but yeah, like it's the measured move to where I suspect price to eventually go to. Now, it's not guaranteed. This zone here has been like a chop zone and kind of like a place where resistance has been confirmed. So there could be a I have been pretty negative in terms of like overall bearishness, but there is a possibility for this zone here to actually initiate a higher lows instance. Okay, it doesn't have to come down here. So if you're in a really bullish environment, bear moves underperform. So um, I don't think we're in that, so to speak. To be honest, I'll be completely honest with you with that. So I don't necessarily think that we're in a position to flip it as support, but the probabilities are there where it this measured move won't even get tagged. Like the supply line might not even get tagged. So that's something to take in consideration. But given that you know we broke out of this rising channel, confirmed it with a head and shoulders break to the downside, printed a lower low, bear flag confirmation, breakout. I mean, it's like a 65% probability that this 21.5K mark will get tagged. And who's to say that it could even stop there? I mean, it doesn't mean that it could stop there. But from my perspective, that's where I'm leaning. But I just have to say, little, I can't just be biased to one side. I want to give you guys like, another perspective. Here is a choppy zone. Okay, so there's going to be a lot of volatility in this particular range, which spans basically 2% right now. But anyway, I'm going to leave it at that. I just want to say thank you so much for, the kind words. I just want to say thank you so much for, if you're still watching, you're awesome. Seriously, you're a badass. But yeah, I just thank you once again. Yeah, so if you haven't already, please like this video. Yeah, if you have any comments, yeah, please, give me a holler down below, and kind of, I would love to hear your perspective and your opinions and stuff like that. Yeah, and if you think this information is like super valuable, like share with maybe your trader friends or someone who's interested in just kind of like just casually investing in the Bitcoin crypto market overall. Like, I mean, I would love to kind of just expand this network and kind of like really get in touch with like crypto natives or just like even traders and stuff like that. That was one of the main reasons as to why jumping into this whole like YouTube verse and all that jazz. But anyway, I'm gonna leave you guys from here. Thank you so much for your time. Have a great rest of the day. Peace out. Bye.